Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so here we are looking at the S&P 500 index, or the SPX. And I just wanted to go over this chart because there's been a lot of talk about possibility of a head and shoulders pattern that we did confirm below a level and that it might be breaking down. I actually don't think that's the case. I think that what we're going to see is a fake out and that it will rally higher. So I'll just give you my thoughts on that. And this was actually inspired by a comment regarding my UVIX video. That is the volatility index that tracks the volatility. And so I like to trade the UVIX, which I've gone over in previous videos. But the VIX, like I had just mentioned, the VIX, that is the volatility index. So, I think that we're seeing kind of a little bit of a spike in the volatility. And I think that's kind of spooking people. I actually think we're going to see a top in that and a pullback. So I wanted to go over it, but I just really wanted to break down my rationale for the S&P 500 coming down more, breaking down to have a measured move to, I think it'd be around 5,600, somewhere around there. But, I don't think that's going to happen. And so, as we see here, the S&P 500 closed at a price on Friday, January 10th at $5,827.04, being down 1.5% on the day. And so I should note that this is the SPX, ticker symbol SPX. And so, my thoughts on this are that, there's a possibility that we have formed this head and shoulders pattern with the right shoulder being kind of like a double shoulder. So it's kind of an ugly pattern there. But, I feel like a lot of people have been talking about this. Everybody and their grandmother has been saying there's a head and shoulders pattern in the SPX and the stock market is going to be rolling over. And so I don't think that's the case, or at least not just yet. And the reason for that is because of, basically all of the new technology that's been coming out. AI, NVIDIA having that little, smaller computer that they just put out. I don't really know the tech very well, but I think that there's just going to be so much innovation that we don't really understand yet. How would somebody, an individual, use the powerful NVIDIA processing chips, their technology? And, it seems like it's kind of, over excessive compute for an individual. But I think from that, you're just going to see so many new innovations coming out. So I think that this is going to be a really good year. 2025 is going to be another good year for the stock market. And I think that with the new administration coming in, Trump being sworn in on the 20th, I think that his administration is going to rally the stock market higher. Although I think we might find a top in the year of 2025. I don't think we're there yet. And so anyways, just some levels that I think are important to be paying attention to. I am going to the, the low from November 6th. That was at a price of $5,864.89. Got it marked right there. And so, I potentially view that as the neckline of this head and shoulders pattern. And so what we can see, we've had a couple wicks over here. Then we got this bounce. We did get one open below it, but then we got a bounce, and we have seen some wicks over here. But on Friday, January 10th, we got the first close below that level. So that could definitely be suggesting that this is breaking down. Excuse me. And so what I would look for on Monday is a reclaim of this level that is, again, $5,864.89. What we want to see is a reclaim of that purple level and ideally getting a close above the high from Friday the 10th. And what would look really bad, if we got a bear flag consolidation over here, then a breakdown from that. And so actually, to get an idea of where price could be going if we do consolidate over the course of the next week or so will be to take a Fibonacci extension from the high here to the low, and then wherever we might consolidate to, getting a high, let's say right around here, that could be bringing price down to around $5,700. So that is a possibility. And another thing that might really be a signal that this will be breaking down is if we did get a close below Friday's low, and so the low was $5,807.78. So that is going to be another level to be keeping in mind. So that's kind of like a red line in the sand. We don't want to be going below that level. But then, just thinking about this and thinking about this head and shoulders pattern where, this neckline has, I wouldn't say it's necessarily been invalidated, but, we have gone lower than the neckline multiple times. So that does kind of make me think that this is not such a clean head and shoulders pattern, especially with this ugly shoulder over here. So, one thing that we could do, and I might actually try to draw a parallel channel to get an idea about this. So just taking the pivot point here, and then also, the pivot low from December 20th, and then connecting that to the all-time high of $6,099.97. So we've got this nice little parallel channel there. I'm just going to make it light blue because it's soothing. I like the way it looks. And so, what happened is, yeah, sure, we broke below this horizontal line here. We did close below it, closing the week below it. So that doesn't look good. But I just think that, a lot of people are panicked at this point. A lot of people, like I said, are drawing this head and shoulders pattern. But really, this neckline, I don't view it as being that strong. And I view this downtrend as being more significant. We actually closed above that. I have not drawn this. I just put it up here just now. And so, I'm happy to see that we closed above this downtrend. And so what I view this as is not a head and shoulders pattern, but a consolidation pattern. And that this is effectively a bull flag, kind of like what happened with Bitcoin. There was a lot of panic that it's just consolidating around 74,000, and then it launched higher. And a way to kind of predict where price could be going is by taking a measurement. I'm going from the low of August 5th, and actually not a measurement, a Fibonacci extension. So going from the low of August 5th, 2024, up to the all-time high, and then to the low that we just recently saw. And these levels are approximate. I'm not going to see if they are perfect, but a 100% extension. So that's effectively the same distance from the low here to the high here, going from the current low up to the high. That is around almost $6,800. So I think that there's a lot of upside still for the S&P 500. I think that we could even be testing 7,000 later this year. And from current price, that's about 16 to 17% move to the upside. So, I just think that looks really good. I think that there's no reason to get panicked about this until we really start to close below this red line in the sand at $5,807.78. And so with that being said, the UVIX over here that I had mentioned, I had been kind of tracking these like approximately 2-week cycles, and I was hoping to pick up some shares last week at $2.99, thinking that that might be the bottom or the low before getting into another, green box. These are all kind of arbitrarily drawn. But what happened is, I wasn't able to enter because the low that we hit on Wednesday was $3.04, so pretty close, but not quite. And I just kind of wanted to be cautious about it because we've had all of these holidays, not only Christmas, but New Year's Day, and then also celebrating or remembering Jimmy Carter on the 9th of January. And so we've just had all of these market closures, and so I wasn't sure if this box would actually be extended or if, in fact, 294 might be the bottom. And so, I think that 294 was the bottom, and I think that we're actually seeing the top. Like I said, I think that we're going to get a reversal. The S&P 500 markets will turn around next week, and I think that they'll be rallying into the inauguration of Trump. I think that's a bullish thing, and so I think with that being said, the UVIX as well as the VIX will be cooling off over the next week or two. And also, this was pointed out to me in the comments of my last video on the UVIX, was that UVIX is actually going to be having a reverse split, and this is going to be happening on January 15th, so coming up this week. And so that is going to be, 1 for 10 reverse split. So if you got, let's see, 1 share, it will be equivalent to 0.1 shares, or if you have 10 shares, that will then be converted to 1 share. And so, for me, I am going to actually put on the brakes with this one, wait for that reverse split to pass, and then, I'll be tracking again about a 2-week period following whatever this high is. Effectively, what I want to do is adjust this box to really, go to the low. It was a pretty short pullback there, but what I think that we're seeing now, and unfortunately I'm gonna have to redraw all of this following the reverse split, but if I just draw a rectangle here up to the high, like I said, I think it's gonna be the high. It's just approximate here, and let's see, I'm just gonna make this faint and green. And so, yeah, I feel like this is the next kind of cycle move up, and I think that we will be seeing a pullback over the next 2 weeks. And so if this is a 1 for 10 reverse split, rather than settling out with a bottom around $3 a share, I think it'll be settling out with the price around $30 a share of this ETF. And I think that could be a great way to hedge in case there is some volatility in the markets. Maybe there's some news that surprises us and people panic sell. It's always nice to be able to take profits when other positions that are long go red, because you can take profits on something like the VIX and then roll that money into the other positions, effectively using that capital to dip buy. So I think this is a great way to play that kind of market activity, that kind of volatility. But as I had mentioned, I currently don't have a position in UVIX, and I am probably going to wait until after the reverse split, and I'll try to redraw all of these boxes, just based on the levels that I have here. It does seem like, it has been a pretty nice thing to be trading, with it pulling down on 2-week cycles, going up on 2-week cycles, of course, being approximate and following the breakdown of this uptrend that I had drawn here. I feel like it's kind of been like a little bit of a regime shift, but I do think that, there will be spikes in volatility, and so I think it's a great way to hedge, especially if we start to see the S&P 500 breaking out to new highs. I think eventually we'll be seeing some pullbacks along the way, just like, we saw these pullbacks over here, and, with this dip buying opportunity of a lifetime on August 5th, lots of panic in the market there. If I do flip over to the UVIX, we can see that corresponds with this big spike here, and on that trading day, or really going from the lows over here over the course of these few weeks, the UVIX went up about 328%, whereas the VIX went up. I'm actually going to have to take a measurement for that. Going from this low up to the high there, it's about, over 500%. Maybe, that dip wasn't bought perfectly. 350%. And so that's kind of why, I think that the UVIX is kind of a nice way to play the VIX, which, as far as my understanding goes, the VIX always has expirations, just like options, whereas the UVIX, you can trade this just like shares. And so that is what I enjoy doing to hedge for market volatility and whatnot. But, anyways, I'm just going to go back to the S&P 500 here to show you, what I think could be happening, that I think that this is a bull flag, not a head and shoulders pattern, and I think that we will potentially be moving up to around $7,000 later this year before ultimately putting in a top and putting in a notable pullback following that. So good to keep that in mind. But yeah, I think that this head and shoulders pattern is nothing but FUD. I think that we're holding this downtrend even with the close on Friday, and I think that this could be some great dip buying opportunities as long as we don't close below $5,807.78 $0.98, and from effectively the low of that channel to the top of it, it's about a 4% move to the upside. So that might not be too crazy, but I think that for the S&P 500, 4% is pretty big, and also I think that means other stocks could be rallying. So good to keep that in mind. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care.